The U.S. stock market, also known as Wall Street, the place where good news is bad news, bad news is good news. Action is based on economic activity, but not the economy itself. We got a jobs report this morning, very surprising given the data we've received all week. Federal Reserve, everyone thinks there's a 90% chance of a rate hike this month. I have one question: for what? Housing and mortgage rates, definitely looks like what's his name did get after it yesterday. Welcome back to This Week in Mortgage, everybody. I'm Sam Battaglia at Mortgage Black in Beverly Hills. I hope you're having a great week. All right, Wall Street, confusing place. Good news, bad news. Bad news is good news. It's not based on the economy, Wall Street. It's clearly based on the money supply. That said, everybody got scared yesterday when we got the ADP payroll report, and that came in at nearly 500,000 people. And then we got the non-farm jobs payroll report this morning, and that came in slightly above 200,000. Never rung so true in the last 24 hours on Wall Street. Yesterday, the good news that there was a lot of jobs were created turned into bad news for the markets as they sold off. This morning, we get the actual jobs report, which is bad news, and the stock market recovers and rallies. Good news is bad news is good news. But here's my question. When everybody got so scared of the Fed yesterday, we've already raised 500 basis points. Honest to goodness, what is another 25 basis points going to do? In my book, it's going to do two things. It's going to mess up consumer confidence, and it's definitely going to mess up consumer sentiment, which we all know are the two most important things in the economy at the end of the day. So, Wall Street, very confusing place, but when you break it down as a money game, it all makes sense. We received the June jobs report this morning, 209,000 jobs, less than expected given the ADP report yesterday, which was nearly 500,000. Got a question. This ADP report, are they counting one person having 4 temporary jobs during a 30-day period as 4 jobs created? I've been watching these numbers for about 20, 25 years or something. I've never seen such a discrepancy between the ADP and the actual jobs report. I'm sure some have. I haven't noticed it. I thought this was very strange. Anywho, we had 3.6% unemployment this morning, heavy underemployment, and no wage inflation. Needless to say, these are not necessarily high-paying career jobs, and we'll get to the significance of that. The Federal Reserve, very dependent clearly on data, jobs data right now. Here's my bit of advice this week for the Federal Reserve. Artificial intelligence is going to take so many jobs, all of our heads are going to spin. I would like to see the Federal Reserve get ahead of something for the one time and say that the jobs market might be decent now, but there could be a day that comes shortly where it doesn't look good because of AI. So maybe they might have to start doing a little bit of planning before they get punched in the face, maybe on their way to the ring, so to speak, because AI is going to take a lot of jobs, and if they're so dependent on jobs data, anybody that doesn't have a crystal ball can tell you that's going to change. Another question, do they think that unemployed people is good? That it's going to bring down inflation? This is like throwing the baby out with the bathwater. These are not $480,000 a year base W-2 jobs with bonus and commission and Christmas bonus and 1 month paid vacations that are being created. These are just entry-level jobs. A few career jobs, of course, but these are mostly entry-level jobs. We're not sitting here minting millionaires every time we get a jobs report. I don't know what they're looking at, but I'd like them to get ahead of the future jobs market, which is going to be dominated by artificial intelligence. And I got a question for them. Where's the inflation at this point? I don't want to hear about inflation in luxury goods. I want to hear about real inflation. And I don't want to hear about a bag of chips being 30% higher because it went from $1 to $1.30. That's not inflation. That's a quarter out of your pocket. Let's just be realistic here. Give me a break. Housing and mortgage rates. What's his name did get after mortgage rates this week. I'm not going to mince words. Rates are terrible. Clients are not happy with their quotes. And affordability is about to be flying out the window at all levels, high end of the market, low end of the market, whatever end of the market. Affordability is about to fly out the window. So, needless to say, it's a very strange real estate market with very low inventory. See some houses sitting and some houses flying off the market. I don't know. You tell me. Okay, everybody, that is my show for this week. I hope you enjoyed it. As always, thank you for your time. Friday again. Seems like a nice day. I hope everybody can deal with the heat out there. Not cool. We have had the 4 hottest days on record in the history of the world this week. I think everybody needs to start recognizing that doesn't. And, just be realistic when it comes to that. Anywho, not a PSA today. Thank you for watching. Thank you for your time. Have a wonderful weekend.